One of the companies wherein 18 out of, or rather 13 out of the 18 analysts that track it are actually bullish and have a buy call. Analysts are now expecting a 75% return in 2019 on Dilip Buildcon. So let's take it across to Rohan, Suryavanshi, Director Strategy and Planning at Dilip Buildcon, to really figure out whether or not this optimism is rightly founded or not. Rohan, hi, good morning, and firstly wishing you a very happy new year from all of us at ET Now.
Good morning, Aisha. Thank you very much for having me on your show. A very, very happy new year to you and Tanveer and to the rest of your team as well.
Okay, great. So let's talk about how 2019 is going to be, and all those 13 analysts which have a buy call on your stock price and they do believe a 75% return in 2019. Would you say that their expectations are online?
Well, in terms of their expectations being online or in line, I guess you guys are a better judge of that, because I wouldn't understand how the stock market does. I can tell you that, our performance is very much on track. Whatever we had promised, we are on track to deliver that. And if you even look at our historical performance, we've shown, that whatever the company talks about, tells you, we end up overachieving it. So stock price is just, consequence of, sentiments. But from our side, I think business is doing very well, and we should end on a very strong note.
But would you say that 2019 is going to be a strong execution year for you?
Absolutely. On a YOY basis, in the first half, we're already up by a little less than 30% in terms of the total revenue. From last year, 7,700 crores of top line, we've guided to about, little around 10,000 crores of top line. We are confident that we should be hitting that number. So I don't see there is any problem with execution, because the company has been doing well.
Okay. Hi, good morning, Rohan. Happy New Year to you as well. Management is, your management has essentially reiterated the guidance for FY19 sales at about 10,000 crores. Do you think the second half run rate will be better than the first half, which means the guidance is intact?
I think in our industry, typically in the H1, you do about 40% of the total revenue of the year, and the H2 is about 60%. This happens because H1 is also the monsoon quarter that comes in. So there's always a lower revenue that's there. Now, if you look at the math, and even if you look at our historical numbers, and we put it out on our presentations, typically that's always been the trend. So we are very confident that it should happen in that same sort of number that we're talking about. However, let me also add that while we are confident of our execution capabilities, you have to understand there is also another party involved in giving out the file, which is the government. So if in case there is any delay from the government in terms of, appointed dates and all that, obviously, some of this calculation may go a little here and there. But we don't expect it to, we expect it to be in the same region. And we are very confident that, government should come out with the dates, appointed dates on all time.
All right. Can upcoming elections bring down land acquisition process to a standstill in select states? Would that stall the rollout of projects for the interim?
I don't believe that it will, and because we haven't seen that there is a huge impact because of election processes on land acquisition. Of course, there are certain things which might get slowed down, but it's not a huge impact. Also, one thing I guess we need to remember is that whenever we get an appointed date for a project, which means 80 to 90% of the land has already been acquired, depending on the model of the project. So you have a huge runway available to work and get your execution and, deliver revenues. And given that most of the players in the industry, not just us, we're looking at a huge order book, and of that order book, the amount that we can all execute right now, we will have appointed it, or the appointed dates should come before the election model code of conduct comes into place. So I don't foresee that being a problem.
Okay, but do you think that second half can be a year where execution can slow down at all? Because industry channel checks are indicating that it's going to be a little difficult to convert this, almost 0.9 trillion rupees of tendered projects of NHAI into orders, as the dominant share of such projects does lack cabinet clearance. And, the cabinet has its hands full, so don't think the clearances would come in either.
Well, I don't have the numbers on how many projects don't have cabinet clearance as of now, but what I can definitely tell you is that most construction companies have an order book of at least 4 years or almost 5-year trailing revenue. So which means they already have so much orders in hand that they can't execute it all in this 1 year. So even if a few projects don't have cabinet clearance, the backlog is so huge that the companies are already finding it difficult to execute what they already have in hand. So for them, I guess this would be, for a lot of them, and I think this is the norm in industry, that it would actually be godsend for them if some projects get a little delayed. However, if you look at the commentary of all construction companies, everyone is talking about growth in revenue in this year, which clearly means that there is higher execution that is going to happen from last year. And I can also tell you very, very confidently that when this year ends, when FY19 ends, the number of kilometers that the government would have constructed will be higher vis-a-vis FY18, and will be higher by at least 15% to 20%. So I don't think so execution relative to last year or the years before that would slow. It would actually increase. Yes, vis-a-vis compared to order books, is the execution going to be at the same pace? I think there might be some. It won't be at the same pace, but definitely it will be the highest year of execution till date that the country has seen.
Okay. Rohan, then give us your sense on how the net debt situation will be managed. Is up in Q2, which how are you looking at the debt situation right now in terms of repayments and stuff?
Well, I think a lot of people probably did not understand it, and they were kind of surprised why the net debt levels were up. But so, if you look at our trends, always in the quarter 2, the net debt level goes up because, again, like I mentioned earlier, it's the monsoon quarter. So, revenues don't happen that much. And we're still investing in people and equipment, so that goes up. Now, if you look at the overall debt situation, when we first, let me first start with revenue. When we first hit the public markets 2 years ago, our top line was 5,000 crores in that year. Now this year we're talking about 10,000 crores. Now if you're increasing your revenue by that much, obviously, and given our model where we don't subcontract anything at all, obviously we need more working capital and also investment in equipment. So the debt levels will always continue to climb up as long as the company is growing at a higher rate than its return on equity. So that is very much in line. However, I think as growth sort of normalizes a little bit, I think these debt levels should come down. Also, what's there is that for a lot of projects, we haven't received appointed date and the mobilization advances. But we've invested in those projects. Now, as soon as the appointed dates come and the mobilization dates come for this year, the net debt level will normalize and will be at a much lower level where it is at right now.
Okay. We wish you the very best for the future, Rohan. Thanks very much for taking out the time to speak with us this morning.